Good afternoon, everyone. Welcome to the Daily Market Update Show, where I update you guys QQQ, SPY, and as well as other tickers that are currently affecting the market, and as well as give you guys support and resistance levels to look into or play off of. Also, I will be giving you guys my perspective going forward of what I will be seeing in the market. Let's get into it. So Nvidia is still the one that's leading the market. So you can see we had yesterday I made a video on the semiconductor potentially a blow off top where because the semi was leading QQQ up. Now would it be leading QQQ down for this week? And this is what we got today after we had a little bit of blow up top from yesterday. So now we are continuing to going down. And is this we're going to ask ourselves, is this pullback healthy or not? And where will we be seeing potentially a bounce, or this is going to continue? All right, so let's get into, before we get into that, I saw a bit of a rate hike change. You can see there was a voting member today that said we could possibly just skip June 14th meetings. And this was at 70%, all of a sudden just flipped to, now we have a pause to 73%. So if you ask me what's going to happen in June 14th, now it's really hard to say due to how fast this thing just flipped up in one speaker. So let's say another speaker comes out and says they want to hike, right? Who knows? Maybe they could just flip back. So we'll just have to wait till that CPI data comes in. This is June 13th or 12th. It's going to be coming in. That CPI data, that's going to be the determining factor if we get a hike or not. You know, if inflation comes in bad, then we potentially could get a hike. But as of now, there is a pause that is priced in now due to 73% of being paused. All right, let's get to the charts. And so yesterday I did the earnings calendar. So the only one I'm looking at is tomorrow, where is AVGO, Broadcom, and after hours. All right, so Nvidia, did a big pullback today after yesterday's topping out. And so what's the next level we're looking at? And because there's not much price action down here, so we have to zoom in to see what it looked like during those days. So we zoom into the 15-minute time frame and we go back to those 2 days. So where was the most price action traded? So it will be this level. You can see between this level and this level was where all the volume was traded the most and where all the price action was trading the most. So the next level we are support would be this level. You can see right here, we have bounce off of that, bounce off of here, held it here, bounce off of here. So that's our key support level. It's roughly at 377.82, give or take $1. Support level are not definites, and we close pretty much right at it. So if tomorrow, let's say we bounce and then break through it, then I'm looking down at 365.6 level, which is the low of this wick. Even though that could act as a support psychologically, there is not much support between here and 366 due to this just one candle, even though there was a ton of volume in this candle. So that could potentially act as a psychological support. That breaks, there's nothing here. Even if you scroll back to history, there's nothing here either. So it was just this morning, after hours. So there's not a lot of volume in this area. Obviously, it's not going to just go shot straight down to here, but there will be lacking support in here, where it could be a fast drop for you to break through it, and then it would just need to form some sideways action, potentially somewhere in this range to start building a support. But we don't know where that's going to be until it starts building, due to it's going to be more of a price discovery around this level, because there's nothing, especially if volumes in after hours are very light compared to during regular trading hours. So this entire move was during after hours on its earnings. So there could potentially be a faster drop if we do break that, especially this level, because there's only this and this left after where we closed today. Keep an eye on watch that. If that happens, then it can likely drag down the semiconductor sector overall as a whole today, which it did. You can see semiconductor is down 2.5% roughly compared to, let's see, it's down. I'm just going to put my candle on top of it. Why is it not showing up? All right, let's see. Roughly 2.5%. So it's been pulling back 5% in 2 days. So due to the semi dropping, so we'll see if it can set a daily higher low somewhere when it's oversold. But as of now, we'll see if it continues to lead QQQ down or not. And although AVGO held today, which is kind of makes sense. I mean, yesterday it was just a straight sell off for as long as it can be. After this morning move, we had a blow off top, which was 14% reversal. Whoever bought it up here will likely not be able to get out unless the earnings is really good. Potentially, they announce something with Nvidia or some AI as well, and who knows, right? Or blow off earning or something. But who knows? It can also go this way due to how much it has dropped. So earnings are always a gamble, and so it's hard to predict. But without earnings, technical analysis wise, this was a blow off top for sure. And bounce a little bit. It's cooling off. Potentially sell off more tomorrow into earnings. Our lead trend will be our guide. So you can see a big move, which I've been talking about all the time. Where the bigger the move, the chances of us forming a pivot, which is a lower high, lower than this high, increases. And there's chances of us getting into a downtrend. For example, if this move was just dropped only to here, then the probability of us going higher increases, right? But this move was big enough where the probability will. All right, let's get into the actual market. SPY. SPY is still in this rising wedge. We've been watching this rising wedge for past 2-3 months, and it's still in play. It will be in play till the end of June if it goes to the end of the pattern, but it doesn't have to. No pattern have to go to the end, but we're getting pretty close to the end of it. It's getting pretty tight. It held a little bit. SPY actually held a little bit better than QQQ today. We're roughly the same. Usually when QQQ drops, SPY drops like this. But QQQ was dropping today. You can see the healthcare sector, XLV, and XLF actually bouncing later in the day. The sector did bounce a little bit into the end of the day. You can see in the morning, there's all this drop. And when QQQ was still dropping, you can see XLF going back up. That held SPY up. Otherwise, SPY would have been down a lot more, just like the healthcare sector helped SPY as well. You can see the morning drop, and the rest of the day it reversed. So that means there's a bit of a rotation in the market where money coming out of tech into SPY. So that means it's still healthy in the market currently. What bears want to see is every sector red at the same time for there to be fear in the market, money leaving the market. Right now, it's more of a rotational still as well. So we'll see if that continues tomorrow or not. We do get another sell-off day in tech. Do we see SPY able to hold up, or SPY could potentially break out of this wedge? So we'll see. But this level is key. We actually held it today. We were broke below it, came back into it. For 1.7, which is the high of this level, and the support of previous level right here, these 2 days. And you can see we rejected from that to third day. So that level is very key. Been battering around this level for a while. So if we break through that, then I'm looking at this wedge support. And if we do bounce off of here, then we're looking back up to this triple top right here. This level, which is roughly around 420. That's going to be the key level for me if we do bounce tomorrow. And let's see. All right, let's get to QQQ. QQQ is similar, healthy daily consolidation. A daily consolidation just means today's candle is low, broke yesterday's low. So now the consolidation is on its way, just like over here. There's a consolidation, big move up, consolidation, big move up here, consolidation, and big move up here, consolidation. So we've got to ask ourselves, is this just a consolidation for the next move up, or we potentially get more pullback? We get another red day tomorrow, right? We pull back another, let's say we pull back 1%. It's still a healthy daily consolidation. Just due to the amount of size we 7.3%, and we are likely still in a bull flag. Let me see here. Yep, so we are within 0.382, within the yellow range, meaning this is still could be a potential daily bull flag. So this would be the pull, and we say we come down here, and then we bounces off that 0.382. Then break higher, and that's a bull flag confirmed. If we do break higher, obviously. If we don't, if we just bounces off here, then it's like a potential bull flag while it's consolidating here. So we'll see if it can actually bounce off the 0.32 or if we even get there. At the moment, it's still a very shallow retracement, meaning there's no red flags for the bulls. And we also bounce off support, which you can see right here. Resistance, resistance, support, now acting as support because we were above it. So we came back into it, we were below it, bounced off of it, formed a lower wick, and closed within the support. So what bears want to see is definitely break below this level and close below it. And the next step of that would be breaking that 0.382 level to negate a potential daily bull flag. And so right now, bears need to do a lot of work still. And bulls are still completely comfortable. Even if we zoom into the 15-minute time frame, you can see a lot of volume, most of the volume was traded in this level. So if we do break below that, there's not much going on underneath it. So Bulls did a great job playing defense over here. So they ended up defending this level. You can see right here, that low was this little cluster of support. It was acting as resistance, right? Right off for you guys. More clearly. See the top of this was acting as resistance. Just right over there. So this is a 15-minute candle bar. So that means it acted as resistance for about an hour, 4 bars. And we bounced off of there today twice. So came down to it. Bulls played defense, bounce off of it. Bears tried it one more time, bounce off of it again. Bulls played defense and bounce close to the end of the day. But that end of the day, that last 10 minutes sell off was mostly end of the month rebalancing for a lot of big tech, big funds and everything. You can see the insane amount of volume right here, and the it was like 6.4 billion on the sell side. So it was a huge drop, like super, just in like 10 minutes. So we do break below this today's low. We're coming into this no support zone where it could potentially drop a lot faster. When we have something like this it means that there's not a lot of support along the way. Meaning, if we do come back to that zone, it also will drop a lot easier. But for something like this, it's different because there was support price actions. But for here, we don't have that. We only have that all the way to like last year, August, which it's not pretty irrelevant now compared to back then. So that's what the QQQ Bulls want to see. Definitely hold this level, and Bears want to break this level. If you're a Bear, if we do break that level, I'm likely potentially looking as actually might come back to here, but that would be quite bearish, which is not the narrative right now. But we'll see. We'll come back to like this zone, which coincides with the old rising wedge resistance, and now what probably act as support if we come back to it. So that would be, let me see how many percent away. That would give us it's only 1.7% drop. So yeah, that could definitely happen. If that happens, I wouldn't be surprised, to be honest. Based on if it drops to here, yeah, we'll still be within the half of the retracement. So if it drops there, it'll pretty much perfectly coincides with the 0.5 here. If we do break 0.5, if we do come down all the way here to 0.5, the next time it bounces, then we're looking for that daily higher low due to the size of the retracement that I've been talking about all the time. But if we do just come back here at 0.382, then the chances of us looking for a higher high, meaning this high is higher than this high, is more likely. So we'll see So the size of retracement is going to be key. Make sure to watch that where we bounce for us in the next 2 days, and we'll go from there. Let's check out the weekly candle. If we do come back, yeah. And I also showed you guys the monthly candle, right, for like a longer term potential zone where we QQQ just tested its 0.618 zone from the top to bottom of this bounce. So that could potentially mark the temporary top for what I keep clicking at. Where's my, yeah. So this is the monthly chart. So we rejected from that 0.618. You can see right here. So that's the 0.61 fib. So that could potentially mark the lower high. So you can see when we talk about a big retracement, the chances of it making a monthly lower high, meaning this high is lower than the prior high, is the most likely scenario. And obviously, we're not going to just shoot straight down to a lower low, but that can potentially mark a temporary top where let's say we just pull back to here, right? No big deal. But we'll see. It's what the longer term time frame is looking like. But we always got to know that market is up 70% of the time based on history, and so longer term time frame we don't want to play against the market, especially if you are a long term trader where you're holding for years, right? Because 70% of the time market is always green. So long term, make sure your IRAs or all your TFSAs or whatever country you're in, you still have those long term positions that you're holding for years and years, and your trading profile will be different. You can trade both ways every day, whatever way makes you money, and don't have a bias in any direction, and continue to trade based on the price action. And yeah, that would make you have more clarity when you trade. So don't look into the macro too much unless you're like doing swing trading. But if you're a day trader, just look at the price action and whatever the chart is telling you, go with the most probable scenario. If you get stop out, you get stop out. Just part of the trading. All right, that's all I got for you guys today, and I will see you guys tomorrow. And I will probably wait till the Broadcom earnings is done, then I'll make the video. And so yeah, feel free to subscribe if you guys made it this far, and feel free to comment below if you guys are in a bearish or bullish position, and what do you think is going to happen in the market. And I will see you guys tomorrow.